Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello traders, checking back in on the broader market. So we had a bullish start to the morning and a bearish sell-off at the end of the day. The bearish sell-off was in response to a CNBC interview from the Fed talking about unemployment and GDP and all that fun stuff. All the things that we already know, but I guess the market, when you remind the market that that's going on, it gets a little scared. So what we have is clear daily higher lows set by breaking the high of yesterday today. The daily higher low is set on SPY at 279.13. Now the question is, can the bears follow through? Can they prove it? Can we confirm daily downtrends to confirm weekly bearish reversal candlesticks from last week? Because the way we're shaped right now, that's a weekly bull flag. If we lose the daily uptrend and confirm the daily downtrend, it'll be a solid red candle this week that will be confirming the bearish reversal candle from last week. So again, we are watching the S&P 500 futures chart, and we're looking for a 12-hour lower high. I was talking about yesterday for the potential that it could be a bear flag. It all depends on the bounce and whether we get follow through or not. At this point, I do not believe it is a bear flag unless we see some massive bear volume to drop straight to a lower low. I'm going to be watching for a tightening 12-hour time frame, and we aren't even convinced yet that our 12-hour lower high has been set. This candle's about to close on the 12-hour time frame, which means from now to when I wake up in the morning, we're going to have one more candle on this chart form, and there's potential for it to be an inside bar. And then if that inside bar forms and it breaks bearish tomorrow during the trading day, we can say, yes, our 12-hour lower high has formed. The most important level is then 27.79.20. I did make a bearish entry on SPY today, and I plan on scaling in a couple more entries if we see further bounce follow through with no 12-hour consolidation. I'm not going to go in depth into that trade game plan because I've already done so with members just recently, and I don't feel like talking about it again. So, can the bears confirm a daily downtrend? IWM. Is this our lower high being set? Well, if the low of today breaks tomorrow, yes. Higher low was set at 122.25. If the low of today, 126.10 breaks, we will have our daily higher low, lower high, and then it will be up to the bears to break 122.25 to confirm a daily downtrend. QQQ double top at 220.04, the top of the bounce. We topped out at 220.14. Keep in mind, regular trading levels are not as important to me as the euphoria highs from last week. Remember those euphoria highs when we had Microsoft, Tesla, and who was it, Facebook earnings, whoever else? We hit a much higher level. 223, the high of extended hours, is 1.5% higher on QQQ than that 220 level. So the play that I'm making on SPY bearish is based off of the extended hours level. I care more about 296.77 than I do about 294.88. Generally, that's not the case, but in this instance, with that being a notable psychological euphoric top for me, it matters more. So QQQ, either way you look at it, we rejected from resistance. If we break the low today, tomorrow, our daily lower high is set, and we have a tightening daily range to be watching. XLF, 7th gap in a row. And I've said this many times, if you are looking to get the most bang for your buck and capitalize on the current volatility and trading market environment, if I were looking to do that, I would be trading futures and I would be changing my sleep schedule. Obviously, everybody has different lives, but if I were able to, I would be trading futures and changing my sleep schedule to capitalize on this opportunity, because we will see this market at some point in time, who knows when, probably after a long drawn out monthly equilibrium and then a break. It was extremely boring when it was just slow and steady bull moves all of 2019. Boring in extended hours. Extended hour didn't do much different aside from regular trading. In this instance, with all these gaps in the current market environment, that's very different. When cryptocurrency went nuts in 2017, I devoted my life to trading. I woke up in the middle of the night 100 times. I changed my sleep schedule, and I hit that opportunity while it lasted because I knew it wouldn't last. I will never do that again because it's not worth it to me at this point, but just putting that out there, that is how I would be trading this current market environment if I were going to be attempting to give it my all, and it would be through futures trading because of the amount of movement we are seeing in futures trading. And XLF, tying it back in, 7 gaps in a row shows us that. So if the low of today breaks tomorrow, 2179, that means our daily lower high is very quickly set. You could consider this a little bear flag. Big 4-day drop, weak bounce, and if we drop down and break 2144, you can call that a daily downtrend. 2144, 2121, 2106 are the 3 most important support levels for me. If those 3 levels break, weekly lower highs are very clearly set in the S&P 500, and we'll take it from there. So key support tests, much closer on XLF than they are on other sectors. XLV today held on very strong for the healthcare sector, but we're watching this head and shoulders. Is this a left shoulder forming? Have to lose the hourly uptrend is step number 1. Just looking for an hourly high or low here at the end of the day. If we lose the hourly uptrend tomorrow, that's potentially our daily lower high being set, and the bears would have to prove it by breaking 96.89 to change the trend and confirm a daily downtrend. Biotech sector, huge follow through after a huge bull day yesterday. We just went from 89.45 back to 98.84, almost pretty much a 10% move in 2 days. But we rejected from resistance. And if the low of today of 96.81 breaks tomorrow, we will have a daily lower high set and a tightening equilibrium. There's a lot of names where the 4-hour time frame shows us an equilibrium. It all depends on what you find most comfortable. But if the low of today breaks tomorrow, 4-hour equilibrium watch on XBI, and I'm going to go over some other individual names where the 4-hour time frame on Tesla, Amazon, it's more clear in the next video I'm going to do 20 minutes after I'm done this video. SMH, is this our daily lower high being set? Well, if we break the low of today, tomorrow, yes. And we'll be looking down at 126.11 for the bears to try and confirm the daily downtrend. TLT, all about 163.48 still in a weekly uptrend. Bulls need to show up soon here to hold that support level and try and maintain weekly higher lows. The VIX, is this an inverse head and shoulders pattern? It's not my ideal. My ideal inverse head and shoulders pattern has the left neckline and the right neckline very close to each other. At this point, we got up to 40.30. That left neckline is still 15% plus away from that. Why do I want those necklines close? I would have wanted this neckline to be up at 45. Why do I want it that close? So that when it breaks, we break both resistance levels at the same time. There's no doubt. Everybody's looking at the same thing and says, yes, that's a clear bull break, clear follow through, no doubt. In this instance, we could form a higher low here by holding 30.50 and then turn around and break 40.30, the top of that move, change the daily trend, but we still have 47.80 resistance a ways away. And again, it's a little bit more timid. And this is the same for head and shoulders patterns for me on tops. I want those necklines close so that when they break both at the same time, and it's very convincing, and there is no doubt in anybody's mind. Same thing with equilibriums. I want that equilibrium as tight as possible so that when it breaks multiple levels. If we only break one level in an equilibrium and the second level is remaining unbroken, there's doubt. Gold. So gold bulls showed up today trying to hold on. 1670 is key support. So still in this tightening daily range. As far as I'm concerned, the dollar is still in a daily equilibrium as well. We broke support at the end of the day Friday on a 5-minute candle. And the fact that we bounced for 2 days now since that happened tells me that break doesn't mean anything to me. The dollar is in a daily equilibrium and gold is in a daily equilibrium as well. Anything under 1739 is a lower high. Things can get choppy in the short term while the daily time frame gets this tight. And we might not see a break this week with 3 trading days left to go. We might have to wait till next week. Silver, sideways 3 days in a row. Bull, bear, bull, same range pretty much. Not much going on. But the miners are confirming follow through. higher low and now a higher high over 34.74. That stands out. A lot of people look at the miners to be potentially canaries in the gold mines to let us know that metals are going to break bullish. Some people might be looking at this metal or this miners chart and say metals are likely to break bullish because the miners are breaking bullish. I haven't seen enough for me to fully subscribe to that yet. But what I do know is we're in a clear daily uptrend and we broke resistance and closed strong. We're in an hourly uptrend where the next time we pull back, we're going to look for an hourly higher low compared to 33.37. And the bulls are positioned very well where if the metals do break their daily charts bullish, miners are looking good. Miners' next resistance is in the 36s from 7 years ago. Oil, bulls have been on a rampage since our daily trend change. The daily trend change confirmed at 1852, and here we are almost 50% above that level on the June futures contract. Very impressive. I started this morning looking at looking at oil overextended and saying, I might want to look bearish. And then I looked at this and said, nope, if then scenario. If the 12-period exponential support is holding on the hourly time frame, then I'm not looking bearish. And that held all day, so I didn't look bearish. And you can even boil it down to the 30-minute. 30-minute exponential support, and I like this better because of all these touches. If that's holding, the bulls have complete control. When that level is lost, zoom out because 4-hour consolidation will be underway to look for a 4-hour higher low to form. RSI is much less meaningful both to the downside and the upside in current oil market conditions. Keep in mind, we are just looking for a weekly lower high. Anything under 29.11, actually, we don't want to use that. We want to use the June contract itself because at that point, U.S. oil is going back to May contract. At this point, anything under 33.15 is a weekly lower high, keeping the longer-term downtrend intact. And let's see how USO is responding to all this. It's going up for sure, just not in a huge way. I mean, that June futures contract is up significantly percentage-wise, whereas USO, 1688 was the low, and here we are at 21. Yes, it's a big move. It's 33% or so, but again, they tried to stop the bleeding by changing how USO was structured and the futures contracts. And really, if they didn't do anything, obviously in hindsight, but if they didn't do anything, USO would be exploding right now. Because again, we are at this point from our low of 650, we're up 300% on this June futures contract. So they definitely had to protect themselves for the potential that oil stayed weak, but USO would have surged to the upside if they didn't touch it, I believe. I don't have a full in-depth understanding of the intricate workings of leveraged ETFs, and it's non-leveraged, but ETFs based on futures contracts, but that's my assumption. Natural gas, big bull break. This is notable. Daily higher lows, 164, another one at 171. Anything above 171 keeps the daily uptrend intact. And more importantly, we broke all our short-term resistances. $2 broke, 203 broke, and now this is a longer-term shift. The weekly time frame is getting us to the highest price that we've seen in 5 months, pretty much high of the year right now. The weekly trend changed bullish. We're over weekly exponential resistances for the first time in 6 months. Keeping in mind, we know we're just looking for a monthly lower high compared to 278, and that is still over 30% away, but it is the first significant bounce in the natural gas chart in 6 months, which is notable. We'll see how long the bulls can keep up the daily higher lows to keep control. So that's where we stand overall. I appreciate you watching. I hope you had a good day. Burden of proof short term is on the bears. Can we confirm downtrends? I'll do this other video here in just a second. We're going to look at Tesla, Amazon, some of the cruise liners. Maybe we'll look at some of our other laggard sectors. I haven't completely decided yet. Ran out of content, so we're going to go back to an old video from a year ago in a botanicals garden. And I did just notice an hour ago that the baby birds over my back left shoulder have hatched out of their eggs, and the parents have been feeding them all day. So I'll get some footage of our new baby birds, second generation. And I'll see you tomorrow. Do good things.